So HFCL has declared their results for Q2 from July to September 2021-2022, and the results are very stable. And for a company like HFCL, this stability is much more important than a sudden upside or a sudden downside in their business. So if you take a look at their summary of the results that they've presented, the revenue has grown to 1122 crores, which is a growth of 6.4% from a similar period a year ago. The EBITDA, which is the earnings before interest, tax, depreciation and amortization, that has grown by a whopping 26% to 173 crores. Whereas if you look at profit, the profit has jumped by 61.2% to 86 crores. Now, if you try to summarize this, the top line has grown marginally by 6%, but the bottom line has shown a lot of improvement versus the previous year, and it has grown by 60%. Now let us take a look at the management commentary. They have very clearly said that this was a strong quarter with growth in revenue, with growth in margins and cash generation as well. The capacity utilization is at optimum levels, which shows that there is a further demand of their products, which is why manufacturing is picking up pace. The most important point, their order book stands at 5,800 crores. That indicates that in the near term, there is no concern on the revenue front. They have ample revenue drivers to drive their top line for the next 1 or 2 years. In fact, their board has also approved a fundraising of 750 crores, which is again a positive sign for the firm. Now let us take a look at the business units which contribute to their revenue. So in 2020, 26% of their revenue came from the telecom products that they were selling, whereas 74% revenue came from the turnkey contracts that they acquired from all the third parties. In 2021, this showed a major change. The telecom products now account for 45% of their revenue. What does that tell you? The products that they are making that are assisting the 5G movement in India are getting traction in the market, which is why the share of telecom products has now jumped to 45%. One small area of concern is that the share of turnkey contracts, the contracts that they are getting from the third parties, has also shown a downside from 74% last year to 55% this year. But the larger point is that the movement towards 5G and even 6G in the next 4 to 5 years is going to augur really well for HFCL. Now let us take a look at this chart that shows the EBIT and the PAT margins. If we talk about the EBIT margins first, which is the earnings before interest and tax divided by the revenue, and try to compare the historical trend. In FY18, this was at 9.5%, in FY19, 9.7%, and the number is more or less on an upside on a year-on-year basis. In fact, for the first half year, which is H1 of financial year 2021-22, this number has jumped to 15.7, which is the highest in the past 5 years. A similar trend is observed in the PAT margin as well, which is the profit after tax. So if you take a look at the numbers, they reported 5.3% PAT margin in FY18, and the number is at 7.6% for the first half of the financial year 2021-22, and that is again the highest number for the past 5 years. Again, a healthy sign for the firm in terms of the margins that they are making. So another interesting chart here is the debt to equity ratio. If you take a look at the blue trend line, which shows the debt to equity ratio, the number in H1 FY22 has dipped to 0.33 from a 0.48 level a year ago. What does this tell you? That the debt that the company had on its balance sheet has reduced, which is why the debt to equity ratio is now coming down. Again, because the debt has reduced, they can now use the funds that they are planning to acquire in growth related activities, and that in future is going to drive both top line and the bottom line as well. If you try to look at the return on capital employed, that is also going up on a year-on-year basis. The number was at 18.2% in FY18, and it is now at 22.7% in H1, which is the first half of the year of FY21-22. Now, if you try to summarize all the slides that you see on the screen, the revenue showed only a marginal increase compared to last year, but the profit jumped by 60%, a very good sign. The share of the telecom products is going up, which is why it's contributing to a 45% share in the entire revenue that they are generating. The debt to equity ratio is going down, the return on capital employed is going up, the EBIT margins are going up, PAT margins are going up. Overall, I would say that these are very stable results for HFCL, and with a near-term view of where the revenue is going to come from, I expect more of an upside in the stock price of HFCL. I have also made a detailed video on the turnaround story of HFCL, the link of which is there in the description. Do check that out and try to correlate that with the results summary that I have just now presented. Alright, that's it from my end. Do subscribe to Finance Lens for more of such content, and I'll see you the next time.